The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.
You're listening to The Money Hour with your host, Tina Mitchell, sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to Money Hour on 570 KVI, the Sunday, December 22nd show. I'm your host and mortgage expert, Tina Mitchell. Thank you for taking time to talk money. I'm here every Sunday at 11 a.m. right here on 570 KVI. I'm dedicated to my listeners, providing you with the tools needed to make informed decisions on all matters regarding your money. And my lineup for the show today, Jeff Smoot with Highpoint Law Group. Today we're going to talk about the gift of estate planning. Why should parents have a will? And third time in studio, so excited to have his wealth of information. And Jim Black with Absolute Return Solutions will be sharing some changes you may want to make in your new year for financial planning and how to maximize your opportunities for retirement. And last in studio, very excited to have Leslie and Denny Hancock with Windermere Real Estate and founders of Mommas Hands. A lot of you listening today may be much more fortunate than others. There's a lot of devastation happening, and I don't know about you, but I can't imagine a better way for the holidays for everybody to have a safe haven. Leslie and Denny's passion in their nonprofit organization, Mommas Hands, and today they're going to share the amazing things their foundation is accomplishing. Great guests, great information as well as always on the show today. For more information on any of the topics discussed today, please take down the show number 1-888-987-0570. Again, it's 1-888-987-0570 or on themoneyhour.com, and you can talk with any of my guests in studio. Now it's time for a little money chat.
Money, money, money.
So I saw a rhyme based on Wednesday's Fed announcement summarizing what's going to take place. This old Ben, he played 3. He's tapering down at the last QE with the kick, neck, paddywhack, give the Dow a bone. This old Ben is going and rolling home. So there you go. Big Ben gave his final press conference on Wednesday, but he will remain as chair for one final meeting on January 29th before handing off the reins to Janet Yellen on February 1st. You have to think that Big Ben imposed his will when the Fed announced that they're going to taper $10 billion to QE3. Back in June, Bernanke outlined a plan to begin tapering before the end of 2013. With the Fed's balance sheet now over a mind-blowing $4 trillion and headed higher, Ben clearly wanted to see the beginning of the end of QE. The announcement of QE was very interesting. They didn't commit to a timetable or even an amount. They will make a data-dependent decision at each Fed meetings and will decide if they would taper down any further. Bernanke did give some guidance that the amount of each taper would likely be $10 billion range, and it's going to be equally split between treasuries and mortgage-backed securities. This means that each Fed meeting will have the same will they or will they not taper debate. And we could see a big spread or a big swing in the bond market because of this. As we've seen when the taper conversation started, there's been over 100 basis points movement in the bond market from one day to the next, sometimes overcompensating for what the anticipation of what the Fed was going to do with tapering. And then immediate recovery the next day when they overcompensated and the bonds started trading for a lot lower. So those of you that listen to the show regularly know that the bond market, positive bond market, is good for interest rates. So if we see the bond market drop in price, we're going to see interest rates go up. When the bond market is trading higher, we're going to see an improvement in the interest rates. Now, the stock market, when the stock market is doing favorably, usually the bond market is going to do the exact opposite. So the stock market did see some favorable movement in the announcement from the tapering. What this is going to mean, if we all can probably agree at some point in time, and we've said a lot, that interest rates are going to go up. It's going to be a question of how much we're going to see them increase and what the time frame or the amount of time it's going to take for the increase in interest rates. But right now, the interest rates are averaging this week around maybe 4.5%. for the 30-year fixed rate mortgage. Not quoting interest rates. Obviously, it depends on a lot of factors, qualifying factors, what type of down payment that you're coming in with. But on average, that's a good amount to look at. So if you were borrowing $300,000 in a loan, at a 4.5% interest rate, your principal and interest would be $1,520 a month, $1,520 a month. Let's just say that the interest rates did increase by 5 to 5.5%. So that's just a 1% interest rate increase from where they're at now. Borrowing the same $300,000 loan amount, your principal and interest payment would increase to $1,700 a month. So that's $180 more in a monthly payment. Even more importantly is how that's going to affect your buying power. Buying power is going to decrease by anywhere from $30,000 to $40,000 a month. So if you're out looking at homes right now, if you make an adjustment in your price search criteria and you drop it down $30,000 to $40,000, you can see the impact that's going to have on the home that you and your family could have. Now, let's say that the interest rates increase 2%, because I think there's a really good chance that we could see the rates get back into not a bad interest rate market. 6.5% is not bad historically. Just if we take it back over the last few years, it seems like it's a high interest rate. But if that did happen, or when it happens, because at some point in time it will, that's going to affect your buying power closer to $60,000 or $80,000. So a huge impact. And for some of you, it might be the ability to be able to buy that move up home, the ability to actually start and not have to continue to rent, but get into the start of home ownership. And for some of you, also just the ability to be able to get those second and additional properties that will allow you to enjoy some additional time with your family. So take a look at what your options are now. He didn't take advantage of the market while the rates are low. And if there's any information that you have regarding mortgages or the real estate opportunity, because as you know, I have a lot of real estate quality agents that are at the top of their field that come into studio here. So lots of help and assistance that you can have through the show. Pick up the phone, give my show a call at 1-888-987-0570. Again, it's 1-888-987-0570 or on themoneyhour.com. And coming up next on the Money Hour, why every parent needs a will. Without one, you have no say over where your assets go. Jeff Smoot with Highpoint Law Group right here on 570 KVI after this short break.
Do you worry about making your next mortgage payment or saving your home from foreclosure? If so, you should consult an attorney. Highpoint Law Group helps individuals and small business owners turn financial distress into financial success. Call Highpoint Law Group today.
Hi, this is Jeff Smoot with Highpoint Law Group. You can reach me at 206-999-8375 or by email at jeff@highpointlawgroup.com. That is 206-999-8375 or email jeff@highpointlawgroup.com.
Highpoint Law Group is a debt relief agency helping people file for bankruptcy relief under the Bankruptcy Code.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com or call 800-865-9005 to get your free site assessment from Solterra Systems.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KBI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. I'm empowering our community, providing you opportunities and solutions when it comes to your money. In studio right now, Jeff Smoot with Highpoint Law Group, here to discuss parents, kids, and wills. 'Tis the season of giving, and I don't think for a parent that there's anything better to give than to make sure that you have a will set up so your kids are taken care of. So, Jeff, really excited to have you back in studio. Thank you so much, and excited about the topic on wills.
It's great to be here. Thanks, Tina.
Jeff worked his way up through legal profession from weekend mail clerk at Seattle firm in 1984 to founding member of Highpoint Law Group in 2013. He became an attorney in 2007 after more than 18 years working as a litigation and bankruptcy paralegal, and opened his own firm, Highpoint Law Group, in 2013. So Jeff, let's go ahead and start out with the importance. I know we're talking about wills today and the gift of estate planning.
Yes, I think a good estate plan is the greatest gift that you can give to your loved ones. And it's the Christmas season, so I thought, well, an estate plan, you can wrap it up, you can put it under the tree, and when they open it on Christmas morning, they'll go, it's just what I always wanted. Not really. But years down the road, they will be very glad that you did. They won't be happy, of course, if you pass away, but they'll be glad because if you have a solid estate plan, they won't be fighting over your estate. They'll be taken care of. And a will is really the foundation of every good estate plan. And if you have kids, you need a will, period.
So can you explain to my listeners why that's so important?
Sure. Let me start with an example of what might happen if you don't have a will. And we'll say hypothetical parents die in a car wreck, leaving 2 surviving kids. And let's just say they have an estate worth $2 million, but they don't have a will. And I like $2 million because you can slice that up pretty easily into $1 million each. Well, that's okay. You don't really need a will because RCW Title 11 has that covered. It provides for how an estate will be divided up in probate and how a guardian will be appointed for the children and who that might be. But it may not be someone that the parents wanted to take care of their kids. There are a lot of people who really would not want any of their family members to be guardians for their children. I know I have some family members I would not taking care of my kids, not want taking care of my kids. So the court would appoint a guardian for them based on the available candidates and who was willing to serve. And they'd also appoint somebody as a trustee to manage the estate for the benefit of the children. And that could be a professional guardian or a trustee. And they would charge money for their services, which would deplete the estate. If it's a relative, they might be unqualified to manage money. They might make bad decisions. They might misuse the money. But let's say everything goes well and the kids turn 18 and there's $2 million still in the bank. Well, guess what? They're adults now, so they each get $1 million. And I don't know of a lot of 18-year-olds who are prepared for or really would know what to do responsibly with $1 million.
Yeah, that could be a little bit of a disaster, Jeff. So what if they had a will? How is that going to change things?
Okay, well, we'll take the same scenario. The parents had wills. Their estate will be probated, and the court will respect their wishes and most likely appoint the people that they wanted to be appointed as guardian and as trustee, unless those people decline or they prove to be unfit to serve for some reason, because things change. Somebody may have lost their mental capacity. They may have become incapacitated since the will was made. So the court might choose the best of the choices, and typically you'll have a first choice, a second choice, and a third choice. So if somebody's unavailable, you still have your choices lined up. And they'll also, in your will, you'll have a trustee appointed to manage the funds for the children until they turn 18. And you can also set up a trust within the will that can stagger when the funds are distributed. So say when the kids turn 18, they might get money to cover their living expenses, college tuition, that sort of thing. And then when they turn 25, they might get a big chunk or all of the remaining trust fund. Or if the parents feel that the kids maybe aren't fiscally responsible, they can delay payments even into their 30s or 40s too. So it allows the parents to make a plan for the kids to protect them going forward.
And maybe 30s and 40s. I mean, just making sure that the money's going to last long enough as well. There may be some, real strategic ideas or reasons why they're doing that. Point being is they've got the choice to set that up. So, Jeff, why should you choose to be a guardian or a trustee? Why would someone choose?
Why would someone choose to be one? Well, a person could, typically the people who are named as the guardian are people that the parents know, who are probably family members, who know that they like kids, love kids, and that they love their kids and really would do what's in their best interests, and would also raise the kids in a way that the parents think they would want them raised. So choosing the guardian to name in your will for your children is really a difficult decision for a lot of parents. I know whenever I've made or updated a will, it's always been the most agonizing part of doing it, because you're saying, well, should my brother be the guardian? Well, what about my sister? Balancing who would be the best and who should be first or second. And as far as a trustee goes, you want somebody, first of all, who is able to manage money. They aren't people who have debt issues. They're good with money, and also they love your kids, and they will do what's in your kids' best interests.
And so it would be a little bit of a balancing act for both of those. And if you have multiple siblings and, there could be some hurt feelings. And so you've got to really, I would imagine, strategize in your conversation and explaining why they've been chosen and maybe at the same hand why somebody else has not been chosen.
It's always really a good idea to talk with them as you're going through the process and talk with them. Do you want to do this?
And I was going to say, some of the siblings or the people they're choosing or thinking of may not want that because it's a big responsibility. So a lot of thought would have to go into that. So Jeff, can the guardian and trustee be the same person? Is that a good idea?
Well, they can, but it's not a good idea. I'll give you a real life example of why this would be a bad idea. There's a case I know of. Somebody from the past. Wasn't the client or anything like that, but a single mother who died, and she left her daughter a $1 million life insurance policy. Her daughter was, I think, 12 years old at the time. Okay. So she had a will, and she named her sister as the guardian and the trustee. So the court appointed her sister as the guardian and the trustee. Unfortunately, the sister and her husband thought that $1 million was more like a personal piggy bank than a trust fund that they needed to save for their niece. And so they spent money. They bought new cars. Mm-hmm. They bought a big new house. They took vacations all over the place. And then by the time the daughter turned 18 years old, they didn't have the money left.
Wow.
And then to make things worse, since she was now 18 years old, and I think they had some guilt associated with the fact that they'd squandered her trust fund, they kicked her out. Not nice.
Wow. So Jeff, what could have been done differently to prevent this from happening to her? Well,
of course, the one thing would be to appoint a different person as a guardian and a different person as a trustee. So in that case, if she had appointed her sister as the guardian, then the sister would have raised her daughter. Okay. And then appointing someone else as the trustee. And you can appoint an institutional trustee, a bank, or you can appoint a CPA or an attorney, people who have fiduciary responsibilities.
That sounds like the better plan.
Well, and they have insurance, and so if the money goes missing, there's some recourse there. Mm-hmm. They charge fees, and so that may not work in a small estate situation. I mean, if it's $1 million estate, it's probably a good idea to have somebody who has fiduciary responsibilities in charge of the money part. But in a small estate, they're going to use possibly more money than is going to be left over at the end of the day. So if they're friends or relatives, then those people really like your kids. But the institutional trustees or attorneys or CPAs, if they don't know your kids, they don't love your kids, they may make decisions based on what exposes them to the least amount of risk, rather than doing what's in the best interest of your kids.
So, Jeff, going back to what you said about discretionary trust and spend-shift trust, how do you protect your beneficiaries from creditors?
Right. So you can establish a testamentary trust in your will, and those two types of trusts can be set up. A discretionary trust is a trust where the distributions to the beneficiary are left wholly within the discretion of the trustee. So this is the classic trust maybe that you see on TV or in movies where the kid goes into the lawyer's office and said, I really need $100,000 to buy that new Ferrari that I really, really want. I know my dad would have wanted me to have that. And the trustee says, no. Mm-hmm. So that would be a discretionary trust. The trustee gets to decide and has discretion to say no. And since the beneficiary won't have control over the money, creditors can't force distributions of that money to pay debts. So a spendthrift trust is a similar type of trust. It just contains a clause that prevents alienation, the legal word, of the beneficiary's interest in the trust, so that creditor claims can't attach to the money, at least until it comes into the hands of the beneficiary. So in that case, let's say dad doesn't think you have good sense and you have some debts, and he doesn't want creditors to take that money as soon as if he dies and you're awarded all that money. Mm-hmm. So a spendthrift trust allows him to basically keep control of that money for your benefit even after he's dead, so your creditors can't take the money.
Makes sense. So what happens if parents get divorced? What should they do to provide for their children?
Yeah, unfortunately, divorces happen, and so the things get kind of confusing in the estate planning world when that happens. The first thing, be sure to update your will after you get divorced. Now, in Washington...
and shouldn't you update your will or at least review it like once a year? Or
it's a good idea to review it or update it. Once a year is
maybe
fine.
Maybe not update once a year, but at least review it and make sure that everything is
Yes.
Still up to date.
Especially if there's any sort of major life event that happens, a divorce, birth or adoption of another child, anything like that. You want to review it and change it if it needs to be changed. So updating your will or your beneficiary designations are especially important. I'll talk about that in a sec here. But in Washington and most states, and in most states, when there's a divorce, the beneficiary designation in a will becomes invalid as to your ex-spouse. So if you get divorced and your will still says that your now ex-wife or husband gets everything, they don't anymore. It just...
Wow, so it automatically protects that you're procrastinating, you're not getting to that possibly.
Right. But that isn't necessarily true with insurance policies, with retirement accounts.
Yep.
So your beneficiary designations are really important because, and there's a case that was widely talked about in New York. After a long marriage, the wife died, and she had $1 million or so in her retirement, in her retirement account. And the husband didn't get any of that. Her sister got it because before they were married, she had designated her sister as the beneficiary on her retirement plan. So that's going to make for some awkward family moments in the future.
It's just like anything else. I mean, estate planning, your CPA, buying real estate. I mean, everything. It's just about preparing and planning and having an expert that actually can give you the advice and the knowledge that you need to make sure you're making the right decisions. So if you're listening right now, and if you don't have an estate plan, if you don't understand, where your money's going, have that will set up, pick up the phone, give my show a call, 1-888-987-0570. Again, it's 1-888-987-0570, because I have an expert right here today in studio that can really help you strategize and plan. And especially if you're parents out there, you want to make sure your kids are taken care of. So Jeff, on this, what happens in divorce, someone gets remarried? Because a lot of times they are.
That's a common thing, and that can lead to more unintended consequences. The new couple often will execute wills that leave everything to each other. The so-called "I love you" wills. They're improving that I love you because I'm giving you everything. Well, if they have children from a prior marriage, and let's say one of them dies, then that's fine. The will probably provided for the children there, but now the new spouse the surviving spouse could remarry and do a whole new "I love you" will, and that would leave the kids with nothing. Or they could just change their mind and say, I don't want to provide for your kids from your prior marriage. I'm just going to give everything to my kids, and change their will. And so you may have hoped that your kids would get something if you died, but you don't.
Wow.
They don't.
So again, great information, great guest in studio, and always a privilege to have you here, Jeff. Thank you so much. We didn't get through all the information, but we definitely have to have you back, and we'll do the second half of the estate planning and making sure you have a will set up. Thanks for coming in.
Thank you.
Coming up next on the Money Hour, with the New Year's coming, it's time to reflect on the changes we want or need to make. Many Americans need to make changes in their financial planning, and that's why I have Jim Black with Absolute Returns Solution right here on 570 KVI after this short break.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com, or call 800-865-9005 to get your free site assessment from Solterra Systems.
Do you worry about making your next mortgage payment or saving your home from foreclosure? If so, you should consult an attorney. Highpoint Law Group helps individuals and small business owners turn financial distress into financial success. Call Highpoint Law Group today.
Hi, this is Jeff Smoot with Highpoint Law Group. You can reach me at 206-999-8375 or by email at jeff@highpointlawgroup.com. That is 206-999-8375 or email jeff@highpointlawgroup.com.
Highpoint Law Group is a debt relief agency helping people file for bankruptcy relief under the Bankruptcy Code.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KBI. Now, back to the show with local mortgage and finance expert Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. My goal is to keep you up to date on the latest news and trends in our local economy. Keep me tuned in, and I will definitely keep you informed. In studio now, another regular contributor to the show, Jim Black with Absolute Return Solutions. Financial planning can make a difference for you and, more importantly, for your family. Whether you're going to live a life without stress, looking towards the future, or whether it's going to make it a lot easier. Having a plan and knowing where your finances are going to take you is really important. And Absolute Return Solutions, Jim Black has been providing advice to his clients for over 25 years. In that time, he worked for some of the largest financial institutes in the world and advised clients in nearly all phases of the financial spectrum. A few years ago, Jim wrote the best-selling book, Happily Ever After. Retirement doesn't have to be just a fairy tale. He's been featured on many TV shows and radio programs, of course, my radio program just being one of them right here on 570 KVI. And recently he made a guest appearance on New Day Northwest on King 5. So talk about someone that has experience sharing with our local community here. And Jim, you definitely do. Thanks for coming back in studio.
Always a pleasure to be here. Thank you.
And let's go ahead and talk about, first of all, if one of our listeners wanted to come into your office and just have a conversation with you, their first visit, what is that experience? What is that?
The first visit into the office really is kind of a get to know you. We do things just a little differently. Most people out there aren't familiar or have never dealt with what's called a financial fiduciary, somebody who actually has the client's best interest above that of the firm, or what I would term a financial salesperson, somebody who's selling a product. And so the reality is, since when a client comes in, they actually engage the firm to create and implement a plan for them to basically make sure they have the income they need and want for the rest of their lives. It's really kind of finding out what's important to you as an individual. What do you need the money to do? How much money do you need to maintain your lifestyle? How much money do you want to pass to your heirs going forward? What does it take for you to really feel like you're going to be successful and basically take the stress away, to be able to simply relax and enjoy the rest of your life?
And that's important. Anything that we do in anything really, it's an individual, and each of us are going to have our own stories. We're going to have our own financial situation, areas that we need to improve and areas that are working well. So I like the idea that the first strategy is just to get to know them and where they're at and where you can help and assist. So that's awesome. So if a listener is ready to retire right now, what can they do?
First thing I do right now would be starting to reduce risk. The biggest problem or the biggest mistake that I see people make coming in who are going into retirement or who are already retired is they continue to have money out there at risk. Now, granted, it has been a fantastic market. Basically, since 2008, the last 5 years, the market has been on a tear. But if I'm going into retirement, realizing that I have gotten the last paycheck I'm ever going to get for the rest of my life, I want to be looking at things differently. I want to make sure that the money's actually going to be there. If I've left it in the market and the market drops, I still have to pay the power bill. I still have to pay those expenses. And so we need to make sure that there's enough funds to make sure that they can cover their expenses, to be comfortable, to travel, which is what a lot of people want to do when they retire, and still get growth to offset the inflation that's certainly going to happen over the next 30 years of their life.
And I think maybe the way you put it, if you're listening right now and you're not near retirement age, I have to say I'm a little ways off from retirement age because I'm in my mid-40s, so got a little way to go. But if you're, when you're in your 30s, early 40s, even mid-30s, just think about if you're not going to get a paycheck, because there is going to be a time that you are never, ever going to get a paycheck again. You're never going to get a raise. I mean, all of us are looking at we're going to continue to get raises with our employment. What if you were never going to get a raise? You better start planning right now on where that money is going to come, what's going to replace it. And that's why, Jim, you do what you do in your practice. So let's talk about the consumer guide that you have for clients. What is that?
Well, the Consumer's Guide, we created this a number of years ago because what we discovered was most people who came into our office or that we ran into or just simply had heard of the firm had questions. And a lot of times they had dealt with people, as I pointed out, that maybe were financial salespeople. And so they kind of got into maybe situations that weren't exactly what they needed or what they wanted. The idea of the consumer's guide was to create something so that an individual could take that. They could read it. It gives them questions to ask not only their current financial advisor, but themselves about what they need and want from their particular situation. In fact, I would say anybody who's listening today, if they'd like a copy of that consumer's guide, if they'll call the show, we will send it out to them and they can review it on their own.
Okay, so that's 1-888-987-0570. Again, 1-888-987-0570, and you can get Jim and his company's consumer's guide. And Jim, so we talked a little bit about what happens the first time somebody comes in and visits your office. So if we have one of our listeners come in and they're having that first visit, you're going through all of their financials, getting, knowing exactly where they're at and where they need your assistance. What does that cost?
Good question. To come into the office, there is no charge.
Okay.
I mean, when you're coming through the initial consultation phase, it's really to determine if we're even a fit between what someone is looking for and what we actually do. And so that first time is really an opportunity to ask us any questions that you have as an individual. It can be on pretty much any topic. We can go over that, answer your questions, and send you away. We've actually never allowed anyone to actually engage the firm in that initial consultation. If they want to do that, they can certainly come back and do that later.
So it really is a chance for them to have a no-pressure chance to interview and see if you're going to be the right fit and the right firm for them.
True, and it's just so different because almost nobody has dealt with a fiduciary. They just don't know what to expect. So it's a very different experience.
Okay.
Most people are used to walking into an office, somebody says, how much money do you have, and here's where it goes.
Sure.
And that's not the way the firm operates.
So everybody has an opinion, Jim, on what is going to happen with Social Security, and I'd be really interested to hear what your opinion is.
Well,
what's coming up? What's in the forecast for Social Security?
We are reviewing Social Security basically on a daily basis.
I'm sure you are.
I will tell you this. I expect the federal government to continue to do exactly what they're doing. And I'm going to throw this out. Anybody who is receiving Social Security will know that this is true, but here's what it is. Basically, Social Security has been increasing with so-called inflation. And so the amount that someone is receiving is increasing. But at the same time, the cost for Medicare is increasing. And so what's happening is people are being now taxed on the higher Social Security number, but they're getting less money because the Medicare cost has increased by as much or more than the increase in their Social Security benefits.
Wow.
So they're moving backwards.
Yeah.
And forget about inflation. So I think that will continue. I know they talk about Social Security now they're saying is going to be broke in 2032. And maybe they're going to make some changes. I expect that they will. They'll probably do some means testing. And they're even talking about eliminating people who make over a certain income, even though they've paid into it their whole lives. So we'll have to watch that closely.
Watch and see what happens there. And so let's say a listener decides to come into the office, but they have all of their money in a stock and everything's invested in it and they don't want to sell. What could you talk to them about?
Well, the first thing I would probably do would be refer them to a psychiatrist.
That makes sense. I'm trying to look at a worst case scenario here, Jim.
I will tell you, we see this fairly often where people will come in with either a legacy holding that they had from their father or their grandfather, and they're emotionally connected to it.
And that's the only investment they have.
Right. What's frightening is that one account or that one stock, anything can happen to that company, whether it's Enron or WorldCom. And that can go away. We actually had a client come in who had a great local stock, Starbucks stock. He loved it. He started buying it the day it came out, bought it for years and years. When he came in to see us, it was probably early 2008. He had a small manufacturing firm here in Seattle, and he said, hey, I want to retire. So, of course, at that time, Starbucks stock didn't pay a dividend. And he said, gee, I can't sell it because it's been as high as 40, and it's only at 27 right now. So I'm going to wait till it gets back to 40, and then I'll maybe do some other things. Of course, the stock with the market rolled all the way down to $6 a share, and he had to sell the stock to keep the payroll going for his company.
Wow. So
even though now the stock is well over $40 a share and pays a dividend, he doesn't have enough left to retire.
Yeah. You've got to be, if you're in a position that you really want to hold and wait for something to recover, you've got to be in a position to financially manage everything until that recovery time happens. Kind of like in the real estate. I mean, in the real estate market, as long as you're not forced to sell in a bad market, it's going to recover. But the issue that people ran into with the crisis is they were over leveraged and they weren't in a position that they could handle things in a rough market that we had. So, Jim, all of the consumers and clients that are coming in and walking through the doors of your firm, what are you hearing as far as what they feel is going on in the market? Are they feeling concern, anxious?
I would say the biggest sentiment that I get when people walk into the office is that they're scared to death.
Yeah.
They look at the economy and say, you know what, things haven't improved in the last 3 or 4 years, yet the market is up, 30, 40, 50%. What's going to happen when reality comes calling? Is this going to come back? What's going to happen to the assets? I think they're concerned about what's happening out there, and they're really looking for some place where they can make sure that they're going to get the income that they need, at the same time try and get some growth. But I think most of what I'm seeing right now is people are looking to protect.
Okay. And so I'm sure you have a balanced approach and a way that you can talk with them to help them get in that right situation, hopefully.
We have a process that takes them through everything that they need, as far as simple things like a budget, how much money are they actually spending, to how much do they really have to have. Most of the people who come in have come from the financial world or the brokerage world that says, hey, you put the money at high risk and medium risk and low risk, and we hope that it's all going to work out. And I look at that a little bit differently and say, let's put a plan together so you only have the money at risk that you actually need to have at risk to make your plan work.
Sure.
If that's only 20 or 30%, hooray. That means if it goes not the right direction, you're not going to get hurt.
Yeah, not going to lose everything. So interest rates are so low and people are taking income from their investment accounts, and it's worked out well for a lot of them. But is this causing you concerns in these situations?
Well, I would say that's probably one of the biggest things that I see in the book that I talk about, that I have seen now over the last 25 years. One of the biggest mistakes that I see people make is they draw income from a fluctuating account.
Okay, so explain that.
So what I mean is a fluctuating account is any account that doesn't have a guaranteed principal. So that'd be your mutual funds, your stock accounts, those kinds of things. But what people typically do is they'll say, well, I'll put all this money out of mutual funds, which are relatively low risk compared to individual stocks, and then I'll just take 4 or 5%, and hopefully that should work.
Sure.
The reality is it did work in the 90s, but since then it really hasn't. And the biggest thing that we find ourselves doing for people who have been doing that is, how do we figure out what they have to live on now? They're not going to have the lifestyle that they thought they were going to have because they took risk that they probably shouldn't have taken, and they took that income from a fluctuating account. I get it, though. I mean, with interest rates at zero or so low, nobody wants to have money sitting at zero, but there needs to be a balance.
Yeah, makes total sense. So, Jim, go ahead and talk about the Santa Claus rally. Explain to my listeners, what is that?
Santa Claus rally. We got Christmas.
Because it is Christmas.
That's right. A couple of days away. Santa Claus rally is something that we see in the market more often than not. It's kind of an interesting kind of phenomenon. And basically what happens is, between now and the end of the year, the market tends to have a spike. A lot of, especially large mutual fund companies, had to sell out of, or had to buy into kind of what they were getting, because they want window dressing. So when they have to report on what they actually own at the end of the year, they have the right stocks and the right things in their portfolio. And so we tend to see a bump in the market. There's more buyers than sellers, and so the market takes a nice little ride between now and the end of the year. Doesn't happen every year, but it happens often enough that it's almost expected.
So wrap up, 2014, beginning of the year, what's going to happen? What do you see happening?
2014, there are so many things going on the horizon out there. It's hard to predict what's going to happen.
We could have a whole show on that, right?
That's exactly right. I will tell you, there are some trends, though. One of the things we see is, if the first week of January is up, most of the time, more than 70% of the time, the market is actually up that year. So watch the first week of January. It should give us a good indication of what to expect.
Jim, thank you so much for coming back in studio, sharing your wealth of information. And again, anything that you've heard from either one of our first two guests, If you'd like more information on, pick up the phone right now, 1-888-987-0570, 1-888-987-0570, and you can talk to any of the guests in studio. Just lots of information, lots of planning that we need to do, and not much time before the end of the year to be ready for 2014. Thanks, Jim.
Thank you very much.
Coming up next in the Money Hour, it's the holidays, and are you thinking about ways to give back? Leslie and Denny Hancock with Windermere Real Estate and founders of Mommas Hands, right here on 570 KVI after this short break.
Are you behind on your mortgage payments and unsure about the road ahead? Magnum Law Group helps families just like yours navigate through the foreclosure avoidance process. Are you underwater on your home and unsure what to do? Magnum Law Group will help you understand your options. Are you facing foreclosure and need to stop a trustee sale? Magnum Law Group has success in doing this and may be able to help you too. If you're tired of dealing with the banks and getting turned down for loan modification, Magnum Law Group will take on the banks for you and lead you through the process for the best possible outcome. They lead the competition with superior knowledge and expertise.
This is Craig from Magnum. You can reach us at 425-605-6393 or at www.magnumlawgroup.com. See you at the next seminar.
Do you worry about making your next mortgage payment or saving your home from foreclosure? If so, you should consult an attorney. Highpoint Law Group helps individuals and small business owners turn financial distress into financial success. Call Highpoint Law Group today.
Hi, this is Jeff Smoot with Highpoint Law Group. You can reach me at 206-999-8375 or by email at jeff@highpointlawgroup.com. That is 206-999-8375 or email jeff@highpointlawgroup.com.
Highpoint Law Group is a debt relief agency helping people file for bankruptcy relief under the Bankruptcy Code.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KVI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. I provide you news on everything money. Fresh information on market trends and conditions right here in our local economy. In studio now, Leslie and Denny Hancock with Windermere Real Estate and founders of Mommas Hands, a nonprofit organization caring for the homeless. Mommas Hands, hope in every individual. Their mission is to help those in crisis regain their self-respect and help them become productive members of society. So excited to have you guys here. This is the first time, I have to say, and not in a good way. I can't even understand why I wouldn't have someone representing a nonprofit organization when we're talking about money, we're talking about the economy, we're talking about our local community and their lives, and just a privilege to have both of you here. So thank you so much.
Well, thank you for having us.
Mother and father of 5 and grandparents of 11. Oh my gosh. I mean, that's a lot. You guys are a busy husband and wife raising a family. Leslie is not only do they have a busy family, but Leslie's a top realtor at Windermere Real Estate. And Denny, as a business owner for floor covering for over 15 years of their marriage, and now founder and now director, I should say, of Mommas Hands since 1990. Denny began working with the homeless on the streets of Seattle and then opened the First House home in 1994. The second one opened in 2004. And the third, I'm sure more to come in future, but the third opened in 2012. So I know Mommas Hands is a 2-part program. So can the two of you tell my listeners a little bit about each of those?
Okay, the first one was in the beginning we wanted to help the homeless, and where I knew the homeless were on the streets. And soon after we started working on the streets, I was wondering, what really are we doing? We're giving them food. They can get food all over the place. But so soon we started using cell phones to help people get in touch with their families. So on the streets, we help reunite families with the homeless with their families, and with the ultimate goal of sending them home. Mm-hmm. And we are still doing that. And we bring youth groups, a lot of young people out with us when we do it. And the second part is our shelters for women and children. I wasn't finding a lot of women and children on the streets. I found out that they were smart enough and they cared enough for their children to get inside by the time I was coming out at night. But when I saw the shelters, I first thought, I'm so glad they have a warm place to be, a safe place. But then I thought, wow, this is their home. How can they possibly make it work with school, with just being a family? How can it work when you have to leave in the morning and come back at night? And so we started the shelters so they could actually have a home.
Mm-hmm. So Denny, with any big accomplishment in life, and without a doubt, what you guys are doing in the foundation is a big accomplish in your lives, that you were able to give back, but also in the lives that you're able to help. There's always a story behind that. So can you please share with my listeners what that story is? Why are you guys doing what you're doing? How did it all start?
Well, I always considered myself a hard worker, and with the 5 kids, by the time I felt like we were still kids, it was just getting harder and harder to make ends meet. And I felt like I had a chance to make it all right with this big job that I took on, and I ended up losing so much money on that big job that I couldn't comprehend making it work, and I just was so down and so confused, but I had to keep working, and one day I was in this small cafe in South Seattle, and a couple of homeless people walked in, and my first reaction was, oh, I hope those guys don't sit by me, and they ended up sitting right next to me. And I'm always been a nice guy, so I said hi, and I talked with the older one for a bit, and I thought, well, this is a good guy, and he went off to use the phone, and I started talking to the younger man, and he didn't reply. I looked closer, I could tell he was blind, and he started shaking, and he fell down to the ground next to me, and I didn't know what to do. I'd never seen that before, and I called for his friend to help. And his friend came over and got down on his knees and comforted this boy, and after a bit he looked up at me and he said, please don't feel sorry for us. He said, this is my son, and he's been like this since he was a boy, a small boy. His soul's in heaven. Someday he's going to take me there with him. And sorry.
No, that's okay, Denny.
And then these same 2 men stood up. They got up and they slowly walked out of the cafe without having anything to eat. And I thought, I have this feeling of love for these 2 men that I've never felt outside my own family, and I was desperate to do something about it. I write music, and I went straight home and I wrote a song about it. And a friend of mine heard the song and said, Denny, this is what you have to do. And he wrote down 10 things. I thought, I can do it. And I've been doing it ever since.
That's the start of it. Yeah. Will you please give your website, Denny, because they can go and listen to the song that you wrote and watch the video and the story. It's
mommashands.org, and that's MAMMAS, hands, HANDS.org.
So listening to Denny's story, having challenges with his own family, with his 5 kids, and running into financial issues, and just being in a coffee shop and seeing homeless people and not wanting them to sit next to him. How many times have we had a feeling of uncomfortableness? And then from that one point turning into a complete opposite and feeling the compassion enough to where changed his whole life and opened up Mommas Hands, and has completely changed a lot of people's lives with what you're doing. So let's go back to the starting of that. You go out in the streets, and your idea, you have no money yourself. You got 5 kids and a wife you're trying to take care of, and you go out to feed the homeless in Seattle. Yeah. What were you expecting?
Well, really, I'm not sure. It just felt so good. I thought, I'm going to change the world. Mm-hmm. You know, this part of the world. I'm going to go out and I'm going to save some lives. And really, after a couple weeks, I thought, okay, I still want to keep doing it. I know I'm supposed to be doing this. And I have young people that start from the very beginning were coming out with me. And I thought, at least they're going to learn what I learned at the cafe. But I don't know what I'm doing for the homeless, really, until some buddy walked up and said, "Could I use your phone?" And back then there were these big bricks that cost 35 cents a minute, and I didn't have 35 cents. And I said, "Oh, who do you want to call?" And he said, "Oh, I'd like to call my mom." And I thought, I need to let this guy use my phone. So I let him use a phone. And his mom lives in Florida. And I thought, I can't afford this, but I'm going to let him use it. And then somebody else walked up and said, "Can I use it too?" And before I knew it, there was like 15 or 20 people in line, and that's all we did the whole time. All
using your phone at 35 cents. And then, the story with that, somebody donated. Who donated all those phones?
An executive back then it was McCaw Cellular.
So you have a will and you have a passion, and it really, really hits your heart. And we all know it is always about the why. The why has to be big enough to enable for these amazing things to come in and for allow you to move forward. So going out, not having any money, feeding people in the streets, all of a sudden, seeing the huge blessing of just letting somebody use your phone so they can call a family member during the holidays. And in some situations, families being able to connect, which you've done a lot of connecting. Wouldn't we all like to be a connector? I mean, there's so many fashions of what your organization does that is just unbelievable. But then from that, everything stepping into what it was, now you decide to open up shelters for women and children with no experience, no formal training, nothing. How did you do that?
It was kind of the same as the start of the phone home program, we call it now, in the streets. I felt like it needed to be done, and we could do it. And I had read an article written by John Carlson about these two nuns in Chicago who started a tough love home. And I read it, and I showed it to Leslie, and I said, "We can do this." And Leslie's been so amazing from the very beginning.
I'm sure she has.
It's like, okay, we can do it. And we both are thinking, but how are we going to go buy a house when we just lost the one we were living in? And she just said, "Denny, if you feel that way, let's do it." And so we went and started looking for houses.
So House of Hope, it's really unique compared to other shelters out there. What's the difference? Explain that to our listeners, Leslie.
Well, I think because of the fact that we're privately funded, I like to think that we're run by pure love and generosity. And so those behind us are very passionate about helping with our mission, which is really to empower the women to be independent. The women that come to us have come from terrible situations, very dysfunctional families, if they even have a family. They're in debt. They sometimes have addictions. They haven't learned simple life skills. They have very little education. Some come to us without even a high school education. We had a girl with just a 6th grade education, a mother. And so there's a lot to try and accomplish. And we can tailor our program specifically, individually to each woman. And unlike some of the other shelters, we don't have a time limit for the women being there.
Wow.
Some need to stay quite a while. And as long as we're seeing consistent progress, then we want them to be with us until they really can be on their feet and independent.
And I imagine in that environment for the women and children that are seeing how gracious and giving that you are without having that restriction and that stress of time, that they really want to better and get out of that situation so that the new people can come in and see the same benefit that you're able to provide for them. So that's beautiful. What about other agencies that you interact with for the House of Hope program?
Sure. Well, we've been so fortunate to be in the North Bend and Snoqualmie Valley area.
And what a beautiful area.
It is a beautiful area, and it's very private because we do have a lot of women that come to us from domestic violence situations, and so our location is a private location, and they can feel very safe there. In fact, the surrounding area is absolutely beautiful, and I do feel that it's almost sacred in some ways, and it has a very healing, feel to it. But we work, of course, with Solid Ground, who helps with transitional housing when they are ready to leave. But specifically in that North Bend Valley, we have Encompass, which they primarily work with childhood development, so preschool and early education. We have local churches and businesses that are helping us. The Snoqualmie Tribe has helped in the past with DV counseling. We have lots of volunteers who come on site who have professional backgrounds and help in training in various areas. So we're very, very fortunate with just so many people that help contribute to the growth of each of the women.
And I would imagine, because that is really what you guys are about. And I know that, in future, it's about continuing to grow the nonprofit, and all of this, it takes a lot of money and time and a lot of resources. What can people do to help?
Well, they can go right to our website, again, www.mommashands.org, and that's with 3 M's. And you can contribute online right there. If they'd like to be involved and give the gift of time, which is something we are very grateful for as well, they can contact us through the website too. We're always looking for people to be mentors and friends to the women, to work with the children in a variety of ways. So whatever someone feels, they have the time or resources to do, we would be so appreciative.
And I think that everybody participating is so appreciative of the opportunity, because we all want to give back. A lot of times we don't have the resources, and we don't have the knowledge or the know of what to do. And a lot of people they don't have finances right now to be able to do it. But like you said, time is as important, sometimes even more important than the money. So I just appreciate so much you guys being here. It's been a privilege and an honor. Thank you.
Thank you so much, Tina.
This is your host and mortgage expert, Tina Mitchell, signing off for the day with warm and friendly wishes to you and your family over the holidays. I look forward to talking with you next Sunday. Be safe today and have a great week. Thank you.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com, or call 800-865-9005 to get your free site assessment from Solterra Systems.
The preceding program was paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395, is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.